morning to one and all. Welcome to my YouTube channel. This is Narayan Rao Kour. In this video, we will understand the national income and methods of measurement of national income, particularly in expenditure method. So first of all, what is national income? National income is the total market value of all final goods and services produced in a country during a given period of time, usually one financial year, is known as national income. Or, in general, a country's income is calculated by summing up the aggregate value of all the final goods and services produced in a country during one financial year is also called national income. So methods of measurement of national income. So here now third method is expenditure method. Third one is expenditure method. The other names of expenditure method are outlay method and income disposable approach. Outlay method or income disposable approach. These are the other names of expenditure method. Right. So what is the data required to calculate national income through expenditure method is data required. Sum of expenditures of three spending units, namely household, business firm, and government. So the data required is the sum of expenditures of the three spending units. The three spending units are namely one is households, second one is business firms, third one is government. Right. So in this method, so first one is private final consumption expenditure. Private final consumption expenditure. Private final consumption expenditure is 2. Private final consumption expenditure of households. Private final consumption expenditure of firms. That is called private final consumption expenditure. So it includes expenditure on final goods and services during the accounting period, expenditure on primary products, so payments for domestic services, and the net expenditure on foreign in financial asset. Foreign financial assets. These four are included in the private final consumption expenditure. So private final consumption expenditure includes expenditure on final goods and services, expenditure on primary products, payments for domestic services, the net expenditure on foreign financial assets. These four included in the private final consumption expenditure of household and private final consumption expenditure of firms. Next, government final consumption expenditure. Government final consumption expenditure. So, government final consumption expenditure includes consumption expenditure of the government. Consumption expenditure of the government on defense, education, healthcare, etc. etc. So government expenditure on 14 heads of accounts, nearly 14 heads of account. So that is from internal security to the assistance to natural calamities. In these 14 heads of account, the government has to incur. That is called government expenditure. So government final consumption expenditure includes consumption expenditure of the government on defense, education, healthcare, etc. But here, what is excluded means excludes. Government also incurred on transfer payments. Transfer payments are excluded, not calculated in the calculation of national income. So transfer payments are excluded. Next, third one is gross domestic capital formation. Gross domestic capital formation means expenditure which is added to the nation's fixed tangible assets, and stocks. That expenditure is called gross domestic capital formation. Expenditure which is added to the nation's fixed tangible assets means visible assets, physical assets, and stocks. So here gross domestic capital formation is equal to gross domestic fixed capital formation plus change in the inventories. Inventories means stock of raw material. So gross domestic fixed capital formation plus change in the inventories, then you will get gross domestic capital formation. So in that gross domestic fixed capital formation includes final expenditure on machinery and equipment, owner occupied own account production of machinery and equipment, expenditure on construction, on land, construction of building, construction of households. These three are included in the gross domestic fixed capital formation. And fourth one is expenditure on acquisition of valuables such as gold or jewelry. Next, so how to calculate GDP market price through expenditure method, or GDP market price is equal to final consumption expenditure plus gross domestic capital formation plus net exports. So GDP market price is equal to final consumption expenditure. Here final consumption expenditure means final consumption expenditure of household, final consumption expenditure of firm, final consumption expenditure of government plus gross domestic capital formation plus net exports. Net exports are exports minus imports, that is called net exports. Then you will get GDP market price. From GDP market price, then we calculate national income. So NNP factor cost or national income is equal to GDP market price minus depreciation. GDP market price minus depreciation is equal to NDP market price plus net factor income from abroad. So then you will get NNP market price, NDP market price, NDP market price. So minus net indirect taxes. So here NNP factor cost or national income is equal to GDP market price minus depreciation. Then comes what? NDP market price. For NDP market price, we add net factor income from abroad, NNP market price. So from NNP market price minus net, so then you will get NNP factor cost. Therefore, national income. So GDP market price minus depreciation plus net factor income from abroad minus net. Then you will get national income. So next, applicable. This method is applicable in construction sector. This method is applicable in construction sector. So in India, we calculate national income so in agriculture sector through product method. So product method is in agriculture, and income method in small scale sector, expenditure method in construction sector. Whereas in developed countries, so income method is popular in developing countries because each and every individual or citizen filed income tax returns properly. So thank you very much. Like, share, subscribe, and comment.